give us a rundown of everything from last week to this week, right? So we had the spot ETF approval, Bitcoin spiked to 49,000, and now it's reversed back down to, what is it, at 42,000 and change? I mean, what's your takeaway from the approval? Was it a success?
I mean, look, long term, there's no doubt that it's going to lead to more flows into the asset class, right? But in the short term, it was a sell the news event. That doesn't mean that it can't pop back up, but I mean, we did at least come off about $6,000 or $7,000 since that time. There was something that I think we were talking about previously, and that was this chart right here. This is the number of days since Bitcoin had a 10% decline. I don't know if the viewers remember this chart. But sure enough, just when we always think that we can't get a drop, Bitcoin finally got a 10% drop as measured from the daily closes on about, day 149. And you can see that we don't normally go too much higher than that before you get a pullback. So pretty standard stuff at this point. I don't think it's, out of left field. It's more or less what we've seen in terms of these pullbacks. In terms of Bitcoin, I think the more interesting thing is kind of what's happened with the altcoin market with respect to Bitcoin. I know we've talked about Bitcoin dominance. Obviously, Ethereum has had a bit of a move recently. So maybe it would be worthwhile to talk a little bit more about that and how the altcoin market. I know you've been more so playing the altcoin market than I have over the last couple of months.
Yeah, and that's a good point. I mean, definitely, like you mentioned, Ethereum kind of perked up right as soon as, in fact, basically when the ETF, actually when that fake rumor hit, that was the first kind of uptick in Ethereum that we saw, and then the next day it kind of continued its rally all the way up to about 27,000. I can bring up my chart here, and you can see that we did hit this upper band on Ethereum, right? So again, if you look back and look and say, okay, well, where's the confluence of levels? There was a level here at around 2,700. And then also look at the parallel lines that we were stuck in. We had pierced it once over here. And if you do a parallel, it gives you the exact high right there. So just kind of cool stuff like that. Before we jump into some of these other altcoins, I would love to just show one thing that's caught my eye on Bitcoin. So I think the first thing is, we're only trading, even like you said, a 10% correction. We're only back to where we were about 10, 12 days ago. So it's not like, yes, it was a 10% correction, but it's not like, oh my gosh, Bitcoin's crashing. It's not crashing at this point. The one thing I am watching though is this little upsloping trend line in purple right here, kind of connecting through this low and this low and this low and this low. We pierced it on that reversal day. We're now beginning to kind of trade a little bit at or below that line. And I do think that, at least according to what I'm seeing, is if we do see a breakdown here, you probably do head to 38,000, which again is not that much further down, right? I mean, it's about $4,000 down, a little less than another 10% move from here. Reason why is not only is the level here, if you look pivot high, pivot high, pivot high. So we kind of were batting against this level, it's 38,000 level, and then we broke out. So support, or in this case, this was resistance. Once it's broken, it becomes support. And then one other little tidbit I like to show here is if we throw the 100-day moving average in there, that's also that level as well. So in terms of would I think that Bitcoin could gain support if it hits 38,000? Yes. And I even think it could bounce off of that level. The only potential bigger negative I see is the fact that yesterday we closed the weekly with a topping tail. Topping tails are reversal signals. So we have a weekly topping tail now on Bitcoin. And again, if you look at Bitcoin or any asset class, topping tails often can mark a longer term high, like not just a 1 or 2 week high, but it could be a multi-month high in Bitcoin. And then in fact, the monthly as well, we obviously still have a lot of time left this month, but currently it would also be a topping tail as well. So little things like that, it doesn't give us any 100%, right? It's all probabilities, but it's just things that as a technician, I pay attention to on the charts of Bitcoin. Going to some of the altcoins, I'd love to hear kind of like, what are you thinking on Solana here? Like, is this going to break down? Is it making a bullish consolidation pattern? I mean, where are your thoughts on these altcoins at this point?
I mean, look, I think collectively, my view on altcoins is that collectively they will remain weak against Bitcoin until we go back to QE. I get the last couple of weeks it's been different in terms of the dominance going down. But before I go too far into that, the other thing I wanted to mention is because you brought up the 100-day moving average for Bitcoin, we actually just got the first daily close below the 50-day.
Right.
And the only reason I think that's relevant is you can see that throughout this entire rally, every time we've gotten a close below the 50-day, we then proceeded to go down about another 13% or 15%. So, I mean, if we were to do something like that, a 13% move gets you down to about 37K, which is kind of that ballpark of what you were mentioning. And also right around that 20-week SMA, 21-week EMA, because those are, the 21-week EMA is at 37K.
Right.
But as far as the altcoin market goes, I think this is what I'm looking at. So I think about Ethereum as sort of like the index for the altcoin market. And basically the idea is if you have an altcoin that can't outperform Ethereum, then what are you doing? I mean, Ethereum is lower risk than a lot of altcoins. But there's this pattern that I've talked about a long time, and I think it's probably playing out again. And it's this idea of, Ethereum loves setting in sort of these higher lows for a while, but there is an issue that potentially emerges where it sometimes, it will eventually likely break down. And it's hard to, of course, know exactly when that time frame is, but I think there's some data we can look at sort of discuss that. Is, are we going to see the same thing play out, right? Like where it has the last couple of cycles or so. But the thing that's really interesting is to note why Ether USD finally broke down during these, during this move right here in late 2016 and in September of 2019 and potentially sometime in the next couple of months. And the reason is if you look at ETH Bitcoin, you can see that the Ether Bitcoin pair, look where it broke down right here. Finally below. See, I mean, this pattern is the same thing, right? A high, a lower high.
Yeah.
I mean, it just keeps emerging, right? You get a high, a lower high, a high, a lower high. You get a bounce. You put in your wick right there. Put in your wick. Put in your wick. You get your second high. You come back down to it, and then you get a bounce. We've seen that a couple of times now. But the issue is that Ethereum tends to then eventually break down on its Bitcoin pair, where it goes, maybe 20, 30, 40% below that low, right? So I still think that needs to happen. Well, nothing needs to happen, right? It's a market. All things could happen. But if you look at where it broke down, where Ether Bitcoin broke down in 2016, it was in October. And where did ETH USD finally break down here? It was October of 2016, right? Right when Ether Bitcoin did. If you go look at the next cycle, where did Ether Bitcoin break down? It was in July of 2019. Where did Ether USD finally break this trend line? July, August of 2019, right? So for me, when I think about the altcoin market, I think that, okay, well, they're more or less likely going to follow the health of Ethereum. And I'm not saying Ethereum can't go up. I mean, look, if Bitcoin bounces anywhere from here, even if it goes back down to the bull market support band and then bounces, then it could still lead Ethereum higher. The problem is I still think, maybe I'm too stubborn about it, but I still think there is a case to be made that Ether Bitcoin will eventually break this low. And when it does, it will likely correspond to Ether USD finally breaking this trend line. And you can see that what a lot of times Ethereum does is it sets a low and then later it retests that low. Sometimes it goes slightly lower. Last cycle, it was basically a double bottom. When are we going to test? When are we going to? That's the thing with crypto. We normally set some type of macro low, and then like a year later or something, we actually test the integrity of that low. And so I still think there's something to look at there. Which that goes back to your other question of altcoins. Yeah, I mean in the short term, as long as Bitcoin stays elevated, the altcoins can sort of keep up with Bitcoin. But I think at some point Ether USD breaks this trend line, and then I think altcoins take a pretty big haircut.
You mentioned how Bitcoin oftentimes or these things retest previous lows. Are you saying that there's a possibility that Bitcoin could retest its 15,000 and change low, or you think that one's now at this point past?
So I use this. So there's a regression rainbow that I've sort of mentioned before, and I can kind of show you where it is. So basically, we would either expect like a macro higher low, a double bottom. Worst case scenario, it could be a lower low. It depends on how bad things get. But if you look at all these prior cycles, after we have our bear market year, we go to one regression band, and then sometime later on, we then go to the one below it, right? So that happened right there. And then if you go to the next cycle, you can see that we first went to this regression band right here, and then eventually we visited the one below it. And in this case, it ended up basically being a double bottom, right? And then you go to the next cycle, and you can see the same thing, right? We put in our first low, but then eventually we revisited the regression band below it. And because it was so much further out in time, it ended up being a higher low because this regression band was higher than where it hit this one. So then I just go to the current cycle and say, all right, well, where are we? You can see that we went down to that regression band, the same one that this one went to. The question is are we going to repeat the same pattern where we drop a regression band? The funny thing is the regression band right now is right at the prior lows, right? So I think that, if we were to get a larger pullback in Bitcoin in the next few months, then yeah, like it's possible we could go back down there. If it takes a few more months, like if it doesn't happen until say like the summer, assuming it happens at all, but if it doesn't happen until say closer to the summer, then it could end up being something like this, where it's, it technically goes down a regression band, but it's a macro higher low. Yeah,
that makes sense.
think, but the issue though is I think if Bitcoin comes back down here or anywhere close to that, I think Ethereum, I think the Ethereum Bitcoin valuation is getting, annihilated. And Ethereum, if it were to break that trend line, that Ether USD trend line that we were showing, that's oftentimes where it gets a pretty big drop, right? I mean, like if you just look at when it dropped below this trend line, it was a 50% drop. When it dropped below this trend line, it was a 60% drop. And I mean, even if it took until say April to do so, a 50% drop basically gets you back down to the prior lows. So I think that's probably what I'm still looking at as the most likely outcome. But I can understand why that can be a frustrating view for a lot of people.
Yeah, totally. Are you looking at so one of the things, and again, I can show my charts on gold here, but gold is trading today, even though the stock market's closed. We do have the futures markets open a little bit, and gold looks like it's basically flat. I mean, had a little dip here on the 10-minute chart, moving back up. Daily chart continues to kind of head back. Just one thing I know about pattern formation is when you get this sort of pattern where you have a flat top, right? And then the rising, kind of what we call rising or bull wedge, usually the breakout ends up being to the upside. So one of the things, at least according to what I'm seeing, is that I'm actually expecting potentially within the next week to see gold break out to the upside here above this level. Finally, we pierced it multiple times, big time here. But the question is, what does that coincide with? Is it a risk off trade where we start to get scared about, there's tensions in the Middle East that seem to be getting worse and worse and stuff going on there? Or is it more about the Fed and potentially they're going to cut rates more? I mean, what are your thoughts on like the Fed and where we stand at this point?
Yeah, so I think if gold were to get above, I agree with you, Gareth. I mean, honestly, I tend to just defer to you when it comes to precious metal analysis, but I will say for gold, I think that if it can durably hold above 270, kind of like above these prior wicks, I think that's a risk-off signal. And as it relates to the Ether Bitcoin pair, I think of if Ether Bitcoin's pair breaks down, that is a risk-off signal. And you can see last cycle when gold, this is the candles over here, right? When it finally broke out, that's where Ether Bitcoin broke down, right? So, and that was where Ether USD finally broke down. So my view is that if gold were to get durably above 270, then maybe Bitcoin has a couple more weeks. I mean, in 2019, once gold broke out, I mean, when gold broke out here, it broke out, the 17th of June of 2019. Bitcoin still was able to stay risk on for 2 or 3 more weeks before finally getting a larger pullback. So yeah, I think that, my sort of base outlook is that Bitcoin continues to do what it needs to do to break all Bitcoin pairs down. It could get a larger pullback potentially, maybe even back to where we were talking about earlier. But at some point, I think gold probably breaks out, Ether Bitcoin breaks down, and then going back to what you said, I think the Fed steps in, and I think they do what they do best, and that's going to be they're going to bring back QE sometime this year because it's an election year. If it weren't an election year, maybe they would be a little bit more strict, but it's an election year. I think there's going to be excuses looked for to why we need to turn the money printer back on. But I think we're probably a couple months away, at least a couple months away from that.
Yeah, I think right now the markets are still pricing in a March cut. I think at the end of March is what the
Yeah,
first cut is being priced in at. And I guess what I'm struggling with is, okay, we see a labor market that at least on the headline is still very, very strong. But the question is then is the underlying. We've heard a lot about, people getting multiple part-time jobs, which makes maybe the labor market seem better than it really is. But what does it tell you about an
right.
individual who has to get multiple part-time jobs to be able to afford rent or whatever it may be? But yeah, I mean, I guess that's the one caveat here where, we saw CPI data a little bit hotter last week. PPI data came in a little bit less than expectations, so that kind of mitigated that. But really, as of now, the labor market seems on the front line to be strong. Does that eventually crack? And you got to think at some point it does. I mean, we've been, I thought honestly by the end of last year we would have been in a recession, and so far no sign of an actual recession, at least according to the numbers. I happen to think that a lot of us out there would agree that there are many people in this country that are probably feeling like it's a recession already.
Well, I know some people have sort of described it as like a rolling recession where it hits various sectors at various times. Maybe that's an appropriate view
Yeah,
of it. But I mean, like I think you're right. Like there's definitely areas of the market that look like the labor market that still look relatively strong. I mean, like initial claims is one that, I mean, with initial claims coming in at 202,000, that's really low,
yeah,
right? But there are areas that don't look that great. I mean, I was looking at this chart here. This is hires, like so total non-farm hires. It's been dropping pretty quickly, the
wow,
last. I
that
mean,
is,
that's a pretty big drop, right? It's like if you were to look at a year-over-year percentage change, maybe take like a 3-month moving average. I mean, it's basically been between like -6 to -7% for about a year now. And so the question is like, at what point does something break, right? At what point does the labor market finally throw in the towel and the unemployment rate starting to go up? It would be interesting if, gold broke out above 270 at the same time that ETH Bitcoin broke down and at the same time that the unemployment rate hits 4%, right? I think if it were to hit 4%, that would probably raise a lot of eyebrows, and that could get the Fed to start to do something to turn this thing around.
interesting, interesting. So, going into the rest of this week, we're obviously getting into earnings season, and that's and speaking of labor market. I think it's worth mentioning that last week Citigroup reported earnings, and then they announced that they were going to lay off 20,000 people over the next couple of years, which actually is 10% of their workforce. So it is a significant announcement. Yes, it's only 10%, but still 10% is significant for a company. My question with that, and this is just another thing I was thinking about, is are they going to lay off 20,000 because the economy's weakening, or is it because they're finding that AI is beginning to displace some of the jobs that people do, and they're anticipating over the next 2 years or so these layoffs that are going to occur? Yeah, AI will replace it. And that's kind of one of my bigger fears for the labor market is that once we do get to a point where the economy slows down, it has a double whammy of this AI kind of taking over jobs in addition to a weak economy. And that can really perpetuate a long recession versus just a limited recession.
I think it's possible that I think certainly AI will take some jobs, but
Hmm.
I also think there's another view that's more optimistic, and that's that while it will take away some jobs, it will probably lead to the creation of a lot of new types of jobs. If you think like when spreadsheets were invented, that killed off a ton of jobs. That like
Right.
a lot of the jobs where people did not have the ability to just work on a spreadsheet online where you could just streamline everything. That killed a ton of jobs, but then it also brought in a whole new like class of jobs that didn't even exist before. So yeah, I think you're right. I mean, I think like there will be some jobs lost from AI. I also think that there's a lot of companies just cutting costs right now because
Yeah.
we don't know exactly how aggressively the Fed will pivot. I think they will cut this year, but will it be enough? I don't know.
Yeah.
But yeah, I think longer term it'll lead to some new types of jobs
Do you
as
think
yeah.
so? I mean, I guess my one question would be, and this is kind of a little off topic, but when spreadsheets were invented, right? Did that tend to replace low paying jobs, and did it increase? Did it increase the disparity between high income and low income, right? And we've seen that disparity of the middle class shrinking, the poor
Right.
groups, increasing, and then the wealthy. Like I just read over the weekend that the billionaires basically doubled their wealth since COVID, while everyone else has basically been suffering. And I guess that would be, and I know it's not really chart related, but it's just an interesting little thought process of, does this increase that disparity between poor and rich?
I think that's a good point. Because it makes it so that it's a skilled type
Skilled,
of job,
right?
right? Yeah. So the more skilled it is, the higher pay it's going to come with. So yeah, it could continue to make that problem even worse. Like, just making that gap even wider. So yeah, I could certainly see that over the next few years. But that's a really long process,
Right.
to play out.
Right.
I mean, it's going to take years, and I think to some degree, the market in some areas has gotten ahead of itself with, because if you think the internet bubble that occurred, yes, the internet ended up becoming the next best thing, right? One of the things that completely revolutionized everything, but the market priced a lot of that in and then had to cool back for a while before going back up. I'm curious about what your thoughts are on on the stock market, because
Mm.
the S&P has been struggling here to get back above its prior highs from 2021. And I remember in 2022, I know that historically this week, like the MLK week, is not always that great for the stock market. I'm curious what your views are, though. I know you were potentially saying you could see it pushing up a little bit higher from here.
Yeah, I mean, it's one of those things where I think that there's a big fall on the horizon at some point, but the timing of these big falls is unbelievably hard because there can be delays, right? I mean, you get the Fed to mention that they're a little bit more dovish; it can delay something, vice versa if they're more hawkish and different things like this. But I do think that looking at the charts, yeah, I mean, the S&P's into resistance here. But one of the things that I've learned in decades of trading is that the markets love even numbers, right? So whether it's 5,000 on the S&P, and you could see that if you go back to 2021, we got to 4,800 and change, but we never touched 5,000. And so there is a chance, I think ultimately there's a big drawdown in the stock market at some point, probably associated with, and we've talked about this on this show many times, that when the Fed actually cuts rates is actually when the markets usually decline. So I still think that will happen. But the question then is, do we touch 5,000 or pierce 5,000 to at least claim that thing? And one of the reasons, it's very psychological, even numbers go into human psychology of, when you hit an even number, you get the media to react. The CNBCs of the world grab their pom poms and do the cheerleading, and you see it on every Market Watch and Bloomberg, and it basically creates the last push of bullishness to get everyone that wasn't long to be on the long side, and it stops out the last of the shorts, if you will, because they're like, oh my gosh, it broke 5,000, it's a huge breakout, and the bullishness is just kind of crazy. But then that's usually the last gasp, of
Mhm.
market power. And so I don't know if it will pierce 5,000, but I'm leaning towards it maybe touching that. Granted, it's only about 4% away at this point, but it wouldn't shock me if we do touch that. But then I do still think, I'm still in the camp that, if you look historically at Fed cutting cycles, that's where that downside comes in. And I still think, again, inversion of the yield curve, right? When it uninverts, and we haven't uninverted yet. So, I mean, it does
Right.
lend us to think that maybe there's that little bit of upside left before maybe we uninvert.
Yeah, it's I think the inverted yield curve is probably one of the biggest headwinds, I think, for markets, because it does have a pretty good track record.
Yeah.
And I think that it's frustrating because of just how long the inversion takes, or
Yes.
sorry, the uninversion process. Like, if
And
you were to, yeah, go ahead.
No, I was just gonna say, and you brought this up with even like in crypto markets, with searches on Google, and even with the recession, right? Remember back in when the Fed first started raising rates, the top search for recession, I mean, it was just massive. Everyone was like, "Oh, well, now we're going right into a recession," and here we are, what, multiple years later, and we haven't hit that recession yet. And searches now have kind of gone the opposite way, where now if you look up like the amount of searches for soft landing, no landing, like all of these things, they're at the highs, right? And so it's amazing to kind of use the tools. And you're right, you just mentioned the internet and its creation and proliferation in 2000, and look at these tools that we have now. But it's just interesting to take note of that. I agree.
Yeah, like some of these spreads are actually getting pretty close to uninverting. Like the 2 year and the 10 year it's starting to close the gap, right? It's not that far away from a potential uninversion. And I mean, it makes sense if you think about like rate cuts that are starting to get priced in. I mean, the market certainly thinks that the Fed's going to start cutting. And if the Fed starts cutting, then that should theoretically bring down the short end of the yield curve,
Hmm.
right? And the short end of the yield curve is still relatively elevated at like 5.5% because that's where the Fed funds rate is. But if the Fed were to start cutting 25 basis points, 50 basis points, 100 basis points, then you can no longer have like a 1 month treasury yield at 5.5%
Right.
if the Fed funds rate is, at 4.5%. So that's where you ultimately get the uninversion of the yield curve, which I do think will happen this year. And that's where the fallout happens. And, unfortunately, QE is like a drug, I think, for markets, and they'll probably just do what they do. Again, we talked about this earlier. They'll probably just do what they do historically and just turn the money printer back on. And my guess is what they're going to hope for when the money printer does come back on, which I do think will happen this year. I'm guessing what they're going to hope for is that they did enough to squash inflation and hopefully not come back with a second wave, right?
Right.
So I don't
That's
know. I
the
mean,
scary thing. That chart from the '70s is the scary thing, is that,
right.
they've said that they don't wanna repeat those same mistakes, but then you find that they're getting closer and closer to starting to cut rates again, which in theory, it makes money cheaper, right? So more people will borrow money, more money goes into the system, and then does it create that second wave of inflation like in the '70s?
Right. I'm still thinking that there's a good chance that headline inflation will come down, at least like in the short term, like over the next, like, let's call it 6 months or so. Because like the major contributions, if this is like inflation year over year, approximation of contribution per category, the main contribution right now is just housing, right? It's like this green in here. And
Mhm.
housing is very much a lagging category. So I think housing will continue to be a headwind for CPI. But once housing comes down and we're back to QE, then that's the question of, well, did they stay the course long enough, or are they making the same mistakes that they made in the 70s?
It's the truth, man. It is the truth. As we come to the end of the show today, I mean, like, as we come into this next week, are you looking for anything in particular? Like what would be the one thing or two things that would catch your eye in the crypto markets or in the general market in general? Do you have anything that you're kind of saying, hey, I'm going to be watching this on the charts?
I mean, I think the main things I think Bitcoin dominance is clearly something that's interesting for sure right now because there's conflicting views on it. I mean,
Mm,
historically, it doesn't go up that much more in the halving year, but also it tends to shoot up as Ether Bitcoin breaks down, assuming that it does. So I think those are going to be the main things I'm looking at are, the relationship of Ethereum to Bitcoin and whether or not if Bitcoin can break the Ether valuation of Bitcoin down. Um, I think that's, for me, that's the most interesting thing because my crypto portfolio has basically just been 99% Bitcoin for, I don't even know. I mean, like for over 2 years now, because I've just been of the view that Bitcoin dominance would go up. So as someone who is seeking out, a change in sort of the market structure, I'd be very curious to see if that's going to happen because the thing that people should realize when it comes to ETH Bitcoin is that if it breaks down, right? If it breaks down, is that once it does break down, it tends to only last about 2 more months after that, right? I mean, like, look here, it only lasts about 7 more weeks. And then here it lasted about, maybe 8 or 9 or 10 more weeks. So if it were to break down, I don't really I think you'd have a couple of months potentially of watching it drop, but then it will probably bottom out. So that's what I'm going to be looking for over the next few months. I think right now, correct me if I'm wrong, a lot of people are speculating on an Ethereum ETF,
yep.
which could be could be one of the reasons why it kind of explains some of the recent price action. But I will say, if you look at even this chart and as it relates to interest rates, this weekly candle by the Ether Bitcoin pair right here in May 2019, 2 months before rate cuts began, was about a 17 to 18% move. We just got a 17 to 18% move last week. Um, so again, I don't know how much higher it's going to go, but I'm mostly looking at Ether Bitcoin's valuation, Bitcoin dominance, and of course, if Bitcoin can stay risk on long enough to break Ether down.
Very cool, man.
What
Very
about
cool.
you?
Yeah, I would say for me, I'm just kind of keeping an eye on the VIX. I think the VIX has been, we've been at kind of compressed levels on the VIX, and I'll bring that chart up and kind of end with this one. But we can see that in 2020 with COVID, you had this massive spike. The only time, in at least in my trading history, when we saw a spike of that magnitude was the 2008 crisis, right? And when we saw the VIX get up ridiculous levels. If we look at the distance between big pops and the VIX, here we were at 47. We touched again 47 or close to 50 multiple years later. And again, just something interesting here is if we take this high and we drag it out here, about 211 trading days between that. If we go from this high here at that same level and we go out here, look at this. We're approaching that almost about 208 bars since our last big pop. So, I do think, if you look historically at the VIX, it's usually this amount of time or less between big pops in the VIX here, and then we really haven't done that. So little things like that, just kind of interesting data points that I love kind of keeping an eye on. It just tells me that complacency is in the market right now. A lot of that is based on the hopes that the soft landing or no landing scenario happens. And then I guess keeping an eye on the labor market and jobless claims are now, jobless claims didn't mean a lot to me, but they're starting to mean more because it's these little signs that could spell something bigger for me, one of the biggest factors in whether the Fed cuts or cuts later this year. So I think that's really about it. But yep.
Is it just me, or have there been? I don't really pay attention to it too closely, but it seems like I've noticed a few more headlines about layoffs this month than I've seen in at least since October.
I agree. And then that Citigroup, just last week, and then BlackRock actually announced some layoffs as well. And what we'll see is as we get into earnings season, and this week we'll have more banks than the tech companies come the week after, is they seem to announce a lot of these layoffs at their conference calls. So I'm curious in the next 2 to 3 weeks what we hear. But I agree with you. It seems like it's starting to uptick a little bit. And again, we'll have to watch the 10-year this week as well. I think that'll be interesting.